For most people, buying a home will be the largest investment they ever make. In today's video, we want to go over 10 of the most vital, most important things that you need to know before buying that next home. My name is James Roberts. I've been a lender here in Utah for over 23 years. I'm with Security Home Mortgage. Not only have I bought and sold multiple properties myself, I've helped about 2,000 people buy homes themselves. And I'm really excited today because joining me is Marla Merrill. Now, I've been in business for 23 years. She's been in business for 32 years. So on today's video, you get over 50 years of real estate experience. Marla, welcome. Thanks so much for being here today.
Thank you, James. I appreciate you inviting me to this interview.
Well, we're excited to have you. And tell us a little bit about yourself. What is it that you love about real estate? Why did you get in it? Tell us some things about Marla.
You know what? I've really always loved real estate. I've always been interested in seeing homes and properties and in values and that kind of thing. And so I got my license back in 1992, 32 years ago. I have mainly concentrated on single family homes, but over the years, I've done recreational property, mainly up in Summit County and along the Weber River and so forth. I've helped a lot of investors over the years. I have built a fair amount of properties myself, usually not me, hammering and nailing, but contracting and that kind of thing. So I have a good knowledge of what goes into a good home. And I think that's really helpful for my clients as well.
Well, let's go ahead and get into today's questions. So having been in the business as long as we have, we've heard a lot of questions over and over. The first question I hear, and it's not always a question, it's in the form of a comment, and that is, I'm waiting to buy until home prices drop. Marla, what do you say to someone that says, hey, I'm not going to buy until home prices come down?
I hear that a lot too. And what I tell my clients is that likely will never happen. And you know as well as I do that over the last 80 years, I think maybe there's been 1 year in 80, I think, if I'm correct on that, where the prices have dropped. There have been a couple of years where they stayed the same, but by far the majority of the years, property has increased in value. So for people who are waiting around, I say no time like the present. You should get pre-qualified and buy as soon as you can because prices are raising all the time.
Yeah, it's crazy because you look at the numbers, last 80 years, there's only been two times. Once in 1990, year over year decline, and then everybody knows about 2008. But you think about it, 2008, we had 20,000 homes on the market. We had liar loans. People could state their income, could get loans right out of bankruptcy. All that has changed. And then ever since then, home prices have only done one thing, and that is go up. So yeah, people that wait, unfortunately, they're just going to pay more down the road. And that's just based on 80 years of evidence. Marla, someone's thinking about buying a house. How do they know when the best time for them to buy is?
Well, I think as soon as they can qualify for a loan, they need to do that. So the real trick is they need to get pre-qualified just as soon as, and even if they're not sure if they can qualify right now, it's good to talk to you, James, and to find out what they need to do to get pre-qualified because the best time to buy a home is as soon as you can buy a home.
And don't we wish we could all go back 20 years and buy at 20-year prices?
Yes, we do. And even last year or the year before.
I bought a home in 2018 and I thought it was top of the market. I was paying top dollar. I bought the home for $388,000. I could sell that
Wow.
today for $600,000.
Yeah, I think especially our first time buyers, they think, oh, we are, it's too much. We can't get in right now. It's got to, the market's going to settle down, but we never see that happen. My best advice is to just jump in when you can, as soon as you're qualified to do so. The numbers are in your favor. The value is going to go up, especially here in Utah, because we have such an influx of people coming in and there's kind of a shortage of inventory. As soon as you can buy, you should buy because you never know what we're going to see in the future.
And we have large families on average
Yeah.
as well. One of the things that makes me sad is when I have someone come to me, they're retired, they're getting kicked out of their apartment, the landlord's selling it, and they're coming trying to buy a home on a fixed income. And if they'd have bought a home 30 years ago, they wouldn't even have a rent payment or a mortgage payment right now.
The mistake people make is they weigh renting and home ownership sometimes on a short-term basis. And on a short-term basis, you can see that maybe renting might be more cost effective, but it's short-sighted because you don't look at the long run, the appreciation that you'll gain on your purchase, and not to mention the fact that you're paying somebody else's mortgage for 30 years instead of your own. So yeah, highly recommend that all renters consider getting pre-qualified and buying a home.
And that's the perfect segue into our next question. And that is, what is the first thing someone should do when they think that they're ready to buy a home? And just like Marla said, get pre-approved. That's the most
Yep.
important thing, the first step you really should take.
Well, it's the first thing that I do is have someone pre-qualified because we don't know where to shop. We don't know if people can even qualify. And I can't even feel good about writing an offer until I know that financial piece. So it's always best to start with you, James, and getting pre-qualified.
100%. The problem is buying a home, you don't know what you don't know. You don't know what you qualify for, monthly payments. Sometimes people will do these online calculators that will just provide the principal and interest part of the payment, but they don't take into account taxes, insurance, mortgage insurance, any of that stuff. You don't know which loan program is going to be best for you. You haven't looked at credit. There are so many things to do. So absolutely 100% get pre-approved as soon as you're ready to start looking for a home. Even up to 6 months before, even if your lease is not up for several months, get pre-approved. And the best part about pre-approval is if you come with me, it's free and there's no cost, there's no obligation, and we can get you taken care of and help you know your answers.
Even if they can't qualify, I know you can give really great advice on what to do so that, they can be working towards being able to qualify.
100%. I never tell someone they can't get a loan. I
Yeah,
just tell
right.
people you can get a loan now, or
Hmm.
you've got to do these things, give them a game
Hmm.
plan for what
Right.
they need to do so they'll be
Hmm.
ready. To get pre-approved is really simple. Give me a call at 801-420-1042, or even simpler, send me a text. Put in the code MM001, M is in Marla, M is in Merrill, 001, and text that to 801-420-1042. And let's get that process started for you. Again, it's free and there's no obligation. All right, our next question is, should I use a realtor to buy a home? Marla, what are your thoughts?
Realtors have a lot of knowledge about the market and they're going to be able to help you so that you don't overpay for a home or under list if you're selling a home. That information is critical. And we've seen a lot of people that have gotten themselves into trouble not using a realtor. And sometimes they make mistakes that are kind of, I mean, once you've done it, once you're under contract, there's not much you can do. So it's important that you have a professional helping you along the way. We also have access to a lot of great people like you that I can refer clients to, but also, after we're under contract, there's a lot of work that needs to be done that way too. So I can guide my buyers through that every step of the way. And I have access to a lot of tools that will really help them in making good decisions.
Thanks, Marla. You've hit on some really important points. The first one I want to bring up is, again, is you don't know what you don't know. Real estate agents have already been through it. They know what forms, they know the things to look out for. We have a case going on right now, a buyer that had an agent representing him, goes under contract on a home for $250,000. We get the appraisal back, and the appraisal comes in over $400,000. When the seller heard this, who was not represented by an agent, thought he was going to save some money, he wanted to back out. And the problem is he's already under contract, he had a legally enforceable contract. So by him saving some money, not getting a trusted professional at his side, he actually is going to cost himself way more in the long run. So please get a good professional by your side. Someone experienced like Marla, highly, highly recommend. Our next question, Marla kind of answered a little bit about this, but let's go a little deeper. And that is it better to rent or to buy? Marla, do you have anything else you want to add on to this?
Well, we talked about it a little bit. And a lot of times, if you do look at the short term, you can make a case for renting because, Yeah, there are a few extra expenses with home ownership, but in the long term, it's just so much better to buy a home. I mean, financially, you're going to be building equity in something. I guess, making that payment actually really forces you to invest in something that's going to help you down the road. And like you said, we get these people that have rented their entire lives, and then on a fixed income, how are they going to make, what are they going to do? Where are they going to live, at that point? And so it just makes good financial sense to start home ownership as soon as you can.
The next question we want to talk about today is costs. How much will it cost me to buy a home? Marla, some thoughts there.
You need to be prepared to make your down payment. Well, yeah, the down payment, and you'll help them to figure out what they can actually put down. And I know that there's a lot of different options. They need to be prepared to put some earnest money down, and they need to be prepared to pay some of the closing costs unless they can roll it into the loan. And I know that you've been able to help many clients figure out that process of what they'll need to close, also, what they're going to need to qualify. I would recommend that they contact you first so that they know that they're in good shape for the closing.
Marla, you mentioned earnest money. How much should someone prepare for that?
Well, you know what? It differs. I recommend different amounts in different situations, and there is no set amount. I mean, it's whatever we want, but we do want to be competitive, and we do want to let the sellers know that we're earnest about our offer. And so we kind of take that one at a time, and we can do that kind of based on what the buyer, wants to invest upfront. But we can work through that in a case by case basis, depending on the price of the home.
This next question I'm going to take, and that is, do I really need 20% down to buy a home? Now, I know a lot of people are out there, they're trying to save up that 20% before they buy. But here's the problem. Home prices on average have gone up 4.51% per year for the last 80 years. Now, that's not every year, but that's the average. Some years it goes up more, some years it's less. Here's a challenge, and that is, in Utah, your average home is around $500,000. 4.51% is about $18,000 to $19,000. So as you wait a year or two or three to save up, your home prices could be $20,000, $30,000 more as you wait. We have zero down programs. We have Utah Housing. That's a zero down. If you're a veteran, no money down required. If you're buying in a rural area and eligible for a USDA loan, you can get into home with no money down. There's also low down programs such as FHA, which is 3.5% down, conventional 3 or 5%. Also, if you have a family member that's willing to help out, gifts from family members can take care of your down payment for you. If you have a 401k, you can borrow against that to get into your first home. So please do not let trying to find a down payment stop you from getting into a home. I've helped many people buy a home for no money down or little money down, and then a few years later, we're refinancing them to a much lower rate with considerable equity because they got into that home as soon as possible. All right, our next question is, how long does it take to buy a home? What is the time frame someone should expect?
It differs from deal to deal, but usually about 30 days, start to finish. And sometimes we can do it a little faster than that, but that's about what it takes to get through the process of our inspections, our due diligence, and for you to get the appraisal done and so forth.
Don't think like it's RC Willie. You can go in and buy some furniture and take it home. How do I get the best interest rate? So getting the best interest rate, it comes down to two things, and that is where the market is and your credit score. Some people think that getting a larger down payment is going to get you a better interest rate, but the reality is that has a small to no effect. If someone is putting 5% down or 20% down, they're probably going to get about the same interest rate. Interest rates are like gas prices, they're like stock prices. They can change from day to day. They can go up, they can come down. You have no control over it. Wouldn't it be nice if we could call the president of the United States and say, hey, I'm buying a house next month. Can you drop those rates for a few weeks so I can get in? We can't do that, but we can affect our credit scores. The higher our credit score, the lower interest rate, the lower our monthly payment. So I've got three pieces of advice for you. Number one, obviously, make sure you make all your payments on time. You can go up to 29 days late and it won't affect you on your credit report. But if you go 30 days late, then all of a sudden your scores are going to drop. Absolutely make sure all your debts are taken care of. Second thing is watch any new trade lines. Do not go take out any new debt if you're ready to buy a home. Don't be in that line at Kohl's and they offer you 30% off to sign up for a new credit card. Don't go buy a new vehicle. I had a client who came to me and I pre-approved him. And then some time passed and he came back to me with a home under contract about 4 months later. Now it was long enough that I had to repull credit. I repulled credit and his scores had dropped 50 points. And the only thing he had done was buy a car. And so that car loan was going to cost him about an extra quarter point in interest, which over 30 years adds up to a lot of money. So make sure that you don't have any new trade lines, anything new like a new credit card, auto loan, whatever. In the first 6 months, it's going to hurt your scores. After 6 months, it's going to help you. So if you are longer than 6 months out to buying a home, yeah, go get that credit card now, get that car loan if you need to. Make sure you spend your money wisely on credit cards because they can hurt as much as they help. But those are some things that you can do. Now, the third and final thing is watch your balance to limit ratio on your credit cards. If your balances are maxed out on your credit cards, that can drop your scores. I've seen people's scores drop over 100 points. So if you're getting ready to buy, maybe use a debit card, maybe pay your balance off, halfway through the month as well, so it reports a lower balance. So those are some things to make sure you get the best deal. But of course, the absolute best thing you can do is get pre-approved as early as possible. So if there are any things that could be improved, we have time to do that before you go find a home. Now, the last thing that we want to talk about today, and that is, do I have to be on my job for over 2 years to be able to get a loan? I'm running into this right now. I had a client just this past week that reached out and said, hey, I want to buy a home. I've been on my job 1 year and 10 months. I just got 2 more months to wait. And the cool thing is, no, you don't have to be on your job for 2 years. You don't even have to be in the same line of work. It used to be they wanted to see you in the same line of work for 2 years, but that's gone away. We just need to be able to see that you've got a steady, consistent income. Now, if you're self-employed, of course, we'll need 2 years, but if you've got a good job and you can show a 2-year work history, doesn't matter what your previous jobs are, chances are very good that you're going to be able to get a loan. So don't be waiting to get pre-approved until you've been on your job for 2 years. Let's get you taken care of. Again, call me at 801-420-1042 or text MM001 to 801-420-1042. So Marla, is there anything else you want to add? Any other pieces of advice?
Not that I can think of, but thank you. I think this is really crucial that we talk about this, especially for people who are considering jumping in the market. I think there's just been a lot of really good information to get people going, get them launched, and get them working on this. So I appreciate you inviting me here to have this interview today.
Marla, it's been so good having you. Everyone, you have a great day. Thanks for joining.